If you've ever wanted to analyse your own stocks, then watch until the end of today's episode, where I'm going to share with you a free gift that's going to add massive value.
I was fortunate enough this month to spend a bit of time with my children, and if you have been following me for a while, you'll probably know that I don't live with my children. They come and stay with me every other weekend and half of most of the holidays, and so when I do get that time with them, it's really good quality time. We did a few things this month. I had to take Megan up to London for a consultation, and we had a load of fun on the train. We turned the day into a big day, and we went sightseeing and had a look around London, and I took her to M&M World, and we went to Trafalgar Square, and we looked around London, and she loved Chinatown, and she pretty much consumed an entire bag of Skittles, and as you can see, she went a bit crazy.
The last time I'm letting you have Skittles.
Oh my god, you're mental.
The last time I'm letting you have Skittles.
Like, seriously, never again.
I'm having bourbons.
I've never even seen you in this state before.
That is a bourbon. You're a bourbon. You're a bourbon.
I'm thinking I might get off a battle and walk.
You're a bourbon.
Just let you go on the train on your own.
You're a bourbon.
Also spent a bit of time with my youngest, who is only 3, and I don't get to spend a lot of one-to-one time with him, so when I do have the kids for the weekend, he generally gets his one-to-one time then, and he was playing with all these cooking things and cooking me different stuff, and we played board games together, and he had a lot of fun trying to play a board game, but basically decided that he wanted them to have lunch together. In this game, you have a bunch of Atlanteans trying to escape the sinking city of Atlantis and trying to get to shore. And there's these sea monsters and sharks and all sorts in the water. And he decided they were all going to have a tea party. So in the game, all the Atlanteans survived because there was no monsters to eat them. It was not quite how the game was supposed to be played, but fun nonetheless.
Okay. Fair enough. You happy with this?
Yeah.
All right. Now we have to take a piece of the island.
This island.
No, the yellow piece of the island, and see what's underneath.
Oh, Hannah, it says requires
Oh, it's a whirly whirlpool. Nobody dies because there's nobody there.
And we went to the park and we did the whole swings thing, which he absolutely adores the park. He's obsessed with the park. Every time he comes over, that's where he wants to go. He wants to go to the park. And it always wears him out, and he's such a cute little kid when he's absolutely knackered, and I just absolutely love having them all around. This month was Fireworks month, so before we took them out to watch the fireworks, I made them do the chores, because, if you've got kids, you should be making them work.
Yeah, cool.
What's the point of having kids if they can't do the housework? But yeah, we went to the fireworks, and about 3 years ago we went to Fireworks, and it rained so hard that we left before the fireworks kicked off because we got absolutely saturated. And then the next year we went, and I can't remember where we went, but they didn't do the fireworks. They cancelled it at the last minute. I think it was weather related as well. And then this year we decided, third time lucky, let's go to the fireworks. So we went to the fireworks. We stayed out with my brother who lived in the town, and this huge rolling fog came over, and you could not see a thing. Like, every firework that went up just lit the cloud up, but you couldn't actually see any of the fireworks. So 3rd year in a row that we went to go see the fireworks, and we still haven't seen any fireworks in 3 years. And you'd probably think maybe you should just give up, but I'm still determined now that we have to go and see some fireworks at some point. I don't even like fireworks that much. I do it for the kids, but oh crikey, 3 years in a row we haven't seen one firework in 3 years. It's kind of crazy. So when I have my kids, I generally don't work at all. I down tools. I'm with them 100%. I'm 100% present with them, and I think that's the way it should be when you don't live with them. But when they're not here, I get myself really deep down into my work, and I love what I do. I analyse stocks for a living for a group of investors around the world. Every company that I've found, we have I create a 4 or 5 page PDF that looks at all the financials. It looks at why is this company great, what makes it stand out from others, what's their growth strategy, what's their plan, what's the company all about, what's the products that they sell, what or the service that they provide, and where is that going, what's the plan for the future. It tells you everything. And so a lot of my time is spent creating those, but also every year, once it's been created, every year when that company releases an annual report, I will update that PDF and send it out to my clients. And so that's something that I've been doing a lot of over the course of this month. Obviously, this month as well was the month of the World Cup starting, and it's a strange time to be playing the World Cup. It feels odd not being in the summer, but I've kind of embraced it now and got used to it. And I unfortunately got deathly sick. I got a case of the old man flu that nearly killed me off, but I managed to survive through it, and here I am just cheering on England playing Iran, not knowing what the score was going to be at this point. But a thoroughly enjoyable game, I should say. It's nice to see England actually score some goals for once. And then the kids came round again, and because of the frequency of how often I see them, we decided we were going to use the last weekend of November, essentially, to build the Christmas tree. We're only going to get one more weekend together between then and Christmas. So this was our Christmas weekend, prep weekend, I suppose. This is the first Christmas I've had with them here. I moved here about a year ago, and last Christmas I didn't see them. So this year we're really going for it. And Noah, my youngest, my 3-year-old, has been on and on at me about wanting to put the star on the tree. He was even giving me directions of how I'm going to need to lift him up so he can put the star on the tree. That's all he's been wanting to do, and he's been on and on. He's been asking me all through the previous months, have I bought the star yet for the tree, have I bought the tree, and that's all he wants to know. And so this year, we had this little moment where he got to actually put the star on the tree, and he was buzzing. He was so happy that he got to do it, and it really made his day, which was awesome. I loved it. So how has November fared for the portfolio? Well, we had a pretty explosive month. It actually went really well. But it's a double-edged sword, and I'll explain why that is in a moment. But in November 2022, the investment value of my fund actually rose by £2,142.62, which in percentage terms is a rise of about 10.1% for the portfolio. So we don't get many of those in 2022. It's not been the year for prices to go up. It's certainly been a year for prices to go down. And that has been great for us as investors, because when you do your analysis and you find the companies you want to invest in, you want cheaper prices. You want to be able to buy your favorite stock for 40% less. You want that, and the only time ever that is going to happen is during crashes like this. So 2022, whilst everyone's been pulling their hair out and panicking, me and my clients, me and my members, we've been buying, but we've only been buying specific stocks that we know in 5-10 years time are going to be huge, going to be far bigger than they are today. And you'd have to be a bit insane to think that the stock market is going to be exactly where it is now in 10 years time. To think that prices are going to be the same in 10 years time, it's never happened before historically. Why would it happen now? And the markets are going to recover, and so we're sowing those seeds now in 2022 to reap the rewards in however long it takes for the markets to recover, and they will recover. But yeah, we saw a 10% increase in November, which is pretty awesome. We didn't pump any money into the portfolio. I don't know why I keep saying we. I didn't pump any money into the portfolio this month. We didn't sell any stocks. We didn't buy any more stocks. We did get £140.66 from dividends. So that's a fairly decent month for dividends. Bear in mind the capital, the portfolio is only 23 grand at the moment. To get 140 odd quid in dividends in 1 month is pretty decent. So we had quite a significant income in the month from dividends. And so because we saw the value of the fund rise by £2,142, we've seen the total value of the fund rise to £23,346. And so looking at 2022 overall, it's been a bad year. We know it's been a bad year for the markets. Many of my favourite stocks are down 30-40%. And that is because nothing to do with their performance. When you look at the financials, they're making record profits. It's all to do with the macroeconomic stuff that's happening outside, the state of the economy, investor sentiment on where the world is going, how finance is going. But what you've got to remember about that is that it's very short term. There's no memory involved. People don't think about the past. It's very in the moment. And so if you have the ability to look 5-10 years down the line, you've got a great opportunity to jump in on this and benefit from these low prices. However, yes, over 2022, we've seen the value of the portfolio fall. And I've pumped in £2,165 this year into the fund. But if we take that out and we look at just what's improved in terms of the value of the fund without the kind of artificial increments that we're pumping in, so literally just what returns have we got from the money already invested, we're down 7 grand in 2022, which is on a percentage terms, we're down 24.8%. So let's call it 25%. So we're down 25% this year. And we know statistically that these 20, 30, 35% year drops come cyclically every 7 years. Now, we had one in 2020 when the pandemic hit. Before that, you'd have to go back as far as 2008, 2009 in the mortgage crisis and the banking crisis and the credit crunch and the recession before that happened before. So, we were due a crash and we got 2 in quick succession. But this is the proper one. 2022 has definitely been the big one. And we've been trying to use this opportunity now to buy as much as we can afford to buy in this year because prices are down on our favourite stocks, and there's some companies out there that are making record profits and their stock price is down 60%, and it's crazy, it's criminal, and we are buying as much as we can afford to buy every month basically because we know this company are in great shape and they're going to do well. They're going to do really well in 5-10 years. So me and my clients, we talk on our Discord forum and our chat, and we're encouraging each other to buy basically as much as we can. But yeah, it's been an interesting month, and when I say it's a double-edged sword, it's because yes, it's nice to see the portfolio rise in value by 10%. Don't get me wrong, I love it, and all my clients are like jumping up and down going, this is great, this is wonderful. But what we've got to remember is that it means that share prices are up 10%. Prices are more expensive now than they were in September, than they were in October. They're 10% more expensive than they were in September and October. And I'm starting to question whether we've seen the bottom now. And I know that's a real dangerous territory. It's a really dangerous thing to even contemplate, is have we seen the bottom? It's like I'm almost cursing the world. But we're seeing a pattern. And if you look at the charts, the historical charts, the markets have been rubbish since the beginning of 2022. In January, they started to fall, right? In February, they continued to fall. In March, we saw a little bit of a spike. It was weak. It wasn't strong at all. And it didn't hold out for very long. And people thought, have we finished this little drop? No. Because what happened was then the price started coming back down again. And we started to really see it fall. And it fell in April, it fell in May, it fell in June. And 3 continuous months of just prices just plummeting. And then in July, we had a second spike. So that was a lot more prominent. That was about 9% jump in July. And again, everyone was like, is this the bottom? Have we found the bottom and now we're rebounding up? Is that what happened? No, the prices continued to fall after July. So then we had August, prices plummeted. September, prices plummeted. Then the first 2 weeks of October, prices continued to fall. But the last 2 weeks of October, it started to balance. And we actually saw prices come back up again and kind of offset the first 2 weeks of October. So that October turned out to be kind of like a kind of dull month. I think my portfolio went up 1% in, I think, 0.8%. In October, nothing really happened. We went down, we came back up. By the time the 31st of October came along, nothing had really happened. It just went down, it come back up, and we were balanced. We were flat. And then November, what's happened is that price, though, has continued to go up. And so what we've now seen from the 52 stocks that I've identified that I like, not all of those are priced correctly right now, so we're not buying all 52. But of those 52, if you can imagine they were in an index of their own, those 52 stocks have reached a point where combined, their price is now the highest, or the prices are now at their highest that they've been in the last 15 weeks. So that means prices have been continuously going up since the last 2 weeks of October, and they've been going up, and they're now the highest they've been in 15 weeks. So now we're starting to ask ourselves, and I've looked at the markets today, being the 1st of December, and they've gone up again. So this is the third spike we've had now in terms of prices quickly going upwards. This is the most prominent spike we've had. It's the longest lasting spike that we've had. And I'm starting to wonder whether or not September was the bottom. And I know that's dangerous, and I know I shouldn't even, who knows? I don't know, you don't know, no one knows whether it is the bottom. We'll only find out in hindsight. But my thinking here is that there's starting to be some more positive optimism out there. It's been doom and gloom all year. And even during those first two spikes, it was still doom and gloom. And that's why I thought to myself, and I wrote letters to my membership saying, I don't think this is the bottom, because there's still too much doom and gloom out there. But I'm starting to see articles. I read today that the Fed have said that they do not expect interest rates to continue rising in 2023. That's the US, of course. But there's these little pockets of news that I'm reading that just seems a bit more optimistic. And I'm starting to wonder whether or not we're now starting to see investors, the clever investors, the investors that move first. I mean, I haven't stopped investing personally, nor have my members, but the clever investors are coming in now, and they're feeling a bit more certain about where the markets might be going, and so they're starting to get in. And I'm not going to suggest that it's going to be plain sailing all the way up. We're going to come down, we're going to go up, but I wonder now if we're not going to see the low prices that we saw in September ever again. It may be that was the bottom, and we're already on our way back up in the recovery. And it's really difficult to know when you're in the middle of it. You can't possibly know, and we'll look back in a few years' time and we'll know by then. But when we go back up, which we eventually will do, and recovery could take 4 or 5 years before we get to new highs. But when we get our next crash, historically speaking, what patterns have shown us is that the prices won't go back down as far as they went last time. And so it makes me wonder whether or not, if September is the bottom, will we ever see those prices ever again? And that makes me really sad, because I'm going to look back. I'm one of those people that will look at a chart of a stock, and I'll look back and think, I wish I'd bought, back then when the price was £4 a share. Now it's £40 a share. I'm one of those people that would sit there and just for a moment, I just think, how good would it be if I'd bought at £4? And I do that all the time. And I know you do too. I know everybody does it. But I've got a feeling I'm going to be looking at the charts in a few years' time and looking back at 2022 during that crash and thinking, I wish I'd bought more. And I've put £2,165 to work this year in buying new positions, but it's not enough. And I'm a bit annoyed that we've got to November this year and I've still not put enough to work. So that I'm feeling a little bit like, if that is the bottom, I'm kind of sad, because it means the window's closing, and it means that those wonderful prices, I've missed my opportunity to get as much as I could. So yeah, it's a bit of a, but then at the same time, it's nice for prices to go back up again and see the value of your portfolio growing. So that's what I mean by a double-edged sword in a way. But yeah, it's it's cool. So that's how the portfolio is going. And if you want to see more detail about this, you can go to my website, chrischillingworth.com, and there's a post on there that's called How My Stock Portfolio Rose £2,142 in November. And it breaks everything down. Literally, as I've gone through it with you, I'm pretty much reading it from the screen. But what it does is it gives you the actual portfolio, the stocks, the cost of those stocks, the market value of those stocks now, the gain or loss incurred, and the value of the portfolio, how many shares I own in those companies, that sort of thing. It's got the dividend history in there, and there's this historical performance tracker. I don't know if you can see this with my mic in the way, but if you go to the website, you'll see it. It's a chart, and this blue line indicates the trajectory of where the portfolio needs to be at certain times of the year for me to reach my target of £1,024,867. And all it is a visual indicator of, are we on track? Am I massively behind, or am I ahead of schedule? Is my portfolio higher than it needs to be to reach that target? And as you will see, historically, we have been smashing it. Since we started in 2020, we've been flying. As the market recovered in 2020, that's when I put a lot of money to work. And in 2020, when the crash happened in February, March, I spent like 11 grand on stocks. And that was the best time to buy, because then the markets then picked back up again and I made huge profits, and we got well ahead of that trajectory line. 2022, we've seen it kind of eke out. Basically, it's gone slowly getting back to that blue line, but we're still quite far ahead of that blue line. And when the markets recover, we're going to see this fly again, and we're going to be well ahead. And the fact that I've been investing, not only the dividends being reinvested, but the £2,165 that I've invested, all been put to work during the lowest prices possible, means that when those companies do recover, their share prices do recover, we're going to be so well ahead of the curve that we're going to be doing great. And I'm excited for that, but obviously we've got to wait a couple of years before the recovery is in full flow, I suspect. But I don't know these things. But yeah, you can see that chart there, and this is really the best place to kind of get an update on things and how things are going. And that is how things are going in November. So I'm really excited. I wish I'd put more money to work during that month, but it's nice to see the portfolio go up, and it'll be really interesting to see what happens in December. Before you go, guys, if you are interested in analysing your own stocks, then I have a free gift that I'm giving away. If you go to my website, chrischillingworth.com, I have produced a new book. I spent the last 3 months writing this, putting it together. It's called How to Find Hidden Gem Growth Stocks in Less Than 30 Minutes. And essentially what this book is going to teach you is a couple of key things that you can employ to help you identify not only great companies, but also the rubbish companies that you want to get rid of and you want to put to one side and never waste any time on. Because when you've got 950 odd UK stocks alone, analysis takes a huge amount of input, a huge amount of time. It's a massive time drain. And anything that you can do to speed up that process makes a massive difference. Well, this book is going to give you an introduction to analysis. It's going to give you some ideas on what to look out for, and you can get it for absolutely free. You go to the website, chrischillingworth.com, and you click on this little yellow button here, click to here to download. And once you click on that, it's going to open up a screen that's going to ask for your email address, your first name, and your surname. When you type that in and you click on get your copy now, this book will get sent to your inbox and it's yours. This book is only going to be available on the website for a little while because I'm going to replace it with something else in the future. So if you feel like this will add value, go to chrischillingworth.com now, go to it today and type your details in, get your copy of it before I end up taking it down. I hope it's going to add value. I'm sure it will. And thank you very much for watching.